Hey guys, I am going left today to go over NVIDIA questions. I am going to give it about a minute to work with the private group as well, and making sure that it's synchronized on the inside portal and a few other members to join. But good morning, guys. How are you? My name is Ruben Danza. Today we're going to go over some tech trades that came up in the options supply and demand group that I'm a part of. And so we are going to now go over NVIDIA as it's what came up this morning. And it's something that I obviously love the tax. I think I've been very open about that. And so something that, oh wait, let me close this. Something that came up about trading NVIDIA, or the general text, is that I also brought up AMD and the way they kind of move with supply and demand. And we also were talking about uh, the way in which different techs move in context of supply and demand, and whether or not I am bullish or bearish with those trades in general. So let me just copy this link really quick and send it to our group to make sure that they have it. And then we'll get started in about a minute or two. So let me go back to, what are we? Is it? Nope, that's wrong. Let's go back to YouTube. And then let me just share this really quickly with the group. Got it. And so you can always put your comments or questions in the chat box, and I will be looking at them. And then we'll go over a few trades and setups in NVIDIA, possibly. Again, nothing I say is a buy, sell, or hold recommendation. You can lose all or more of your capital trading and investing in the financial markets. This is simply for entertainment purposes only. And so with that said, we're going to go ahead and look at levels in just a minute here. So with that, I will be monitoring mostly the YouTube chat, as well as the Zoom, and see if any participants are in there. I do see someone coming in, so I should be able to see your questions, but I might be able to see them a little bit easier if they are, if they are on YouTube, because I am traveling, so I only have one screen. So with that said, let's go ahead and look. So first and foremost, we want to look at the NASDAQ, because I like to look at the overall, obviously, futures, the overall index, to then look at the individual stocks that composited, right? So, or we can always look at the QQQ and look at possibly overlapping supply and demand levels here. And so right away, we can kind of see that we're obviously on a bullish uptrend. We saw, so let's go back to the fractals of 4. So I'll be doing more classic OTA style of depiction. And we can obviously see here that on the daily candles, we have seen a significant uptrend. And then we had a little bit of a pullback yesterday, but it's safe to say, with the new COVID lockdowns and what have you that are allegedly happening, it's safe to say that we will probably see a rotation back into the tech sector, if you believe in rotations at all, as depicted by the mainstream media. And so with that, we can generally see where there might be some overall demand here in the general index. And then we're going to go ahead and overlap NVIDIA. So I'm going to go ahead and notate mentally, or you can obviously write it yourself, the date in which we maybe saw some demand here. So let's go and see now where we are on the 11th. And I do like to look at the dates, because sometimes if you're new to correlations and stuff like that, it could be easier to just look at the date and see if there was demand forming in that area for that correlated NVIDIA or AMD. Let me add AMD on here, or make sure that it is already on their stock. And actually, I do have an affiliate link with Interactive Brokers that I will share, that if you guys are at all interested. You get a free stock if you use it, but obviously no pressure. So MU and NVDA. So I got into NVIDIA while maybe like a year or so ago. No, longer than that. Let's see. When it came down to 176. And so obviously the thing about the way I look at Nvidia and AMD, they move just about the same. And if you're looking to capture an exponential gain, or to capitalize from the same move, you might be able to have a better possible trade with the AMD in terms of risk reward, looking at the percentage up move, right? So I think I did that with another students on a different session. So I like to look at the up move in terms of range by percent, because obviously percent is far more important than actual dollar amount, because you can buy one share of $100 stock or 100 share of a $1 stock. And so we can see how here in Nvidia, it moved about 130 or so percent from the March lows, and this happened by the 7th, right? So it would happen roughly in 5 months. And the reason I like to know that is because I do like to see, before I go into any trade, if I'm going to buy in the money, out of the money, a vertical put, or what have you, with the best break-even supply and demand zone, I do like to see what the potential move is for the individual stock, right? So if we're seeing 130% move or so in about 7 months with Nvidia, let's go ahead and now see what happened with AMD around the same time. And so AMD from March here to the set, so what would that be? So around this, it moved around the same, right? So now we know that not only are they significantly correlated, and so let's go ahead and illustrate that by removing one chart. Yes. And then I'm going to go ahead and extend this chart, so we can basically look at the correlation neck to neck. And so let's make sure we're on the same time frame, weekly, or no, we're on daily, right? Daily. Excuse me, I am a little bit under the weather, but it's not Kofifi, so it's fine. So we can see here that these two charts are pretty much identical. They had a very similar move on both accounts, meaning that if we're going to look at the supply and demand range, for example, of the overall index going from the 1111, which is easy to remember, we can contextually see that we could potentially capture both up moves in percentage at around the same rate. And so we want to be able to then look at the best break-even price in context to the nearest demand zone, which is now, let's look here at the daily and see where the potential demand zones are. So because we are doing options, I personally do like to go on slightly longer time frames. Obviously, because they don't expire. Oh wait, let me share this with the community group, because they don't expire tomorrow, right? Unless you are actually trading weekly options, you're not going to see an expiration that is especially for a move like this, right? And the reason I do bring that up is because during these volatile times, in my opinion, as an all asset trader, I do prefer to trade specifically options, because they do cap your overnight risk in this in this market, right? Because if you're trading the futures, you could gap on the 1 hour or on overnight. Same with the stock. And so for that reason, right now, as an all asset trader, I do personally prefer the options. And so admit it should allow everyone to come into the room. I don't know why it's not doing that, but anyway, this is recorded on the YouTube, so you'll be able to see it even later, and you can also see it on Capital Endeavor on the main portal that we developed. But so now let's go ahead and just cut the fluff and just go right into looking at the options chain. One final note that I did want to make is that I do like to look at longer time frames, no less than 3 months, even if I am buying any kind of calls or out of the money. And if you guys have any questions, you want to dial them in or just ask them outright, please feel free to do so. I think I hear someone. And so you can always cash out the option contract early, but if it expires, it expires, right? So that's why I do like to go on the longer time frame. I do hear someone, so feel free to say hi, or if you have any questions, feel free to ask them out loud. But being that Nvidia is what we just talked about, we're going to look now at potential demand. I do like the way this was retested. I would say this is probably going to be a stronger zone. Let's see. So if we go by the daily, so if we go by the daily here on AMD, and we can see some demand here on 1102, in my opinion. And the reason I'm drawing supply and demand on the actual stocks is because I do want to go by break-even price. And sometimes if you do some vertical puts, you can still capture the upside while being able to get a break-even price that's even better than current price. That's not always the case, but when that is the case on a longer time frame demand, I do like to capture it in that way. So let's see. So I do like it around $75, but being that for a lot of these, we're going to be at all-time highs, I do like to look, like I said, at the exponential, the rate of change or the upside percentage move in, let's say, 3 months, just to give myself an idea if I want to, which here we can see what, so we can see from November to December, the low and the high is roughly 34%. And the reason I like to know that is because when we are on all-time highs, I could consider buying an out of the money call if it's a position that I want to be in, like an AMD or an Nvidia, for example, without having a ton of risk, right? Because oftentimes when we buy in the money calls, right? So let's just begin to look at the options chain. And I keep thinking this, I go to Nvidia, excuse me, I keep saying I'm going to. Let me go to Nvidia stock. And let's look here. So November. So here, Nvidia has been pretty sideways the last 3 months. So for me, already, I would probably not want to get in something that's been sideways since what 10, 11, yeah, for 3 months. And then the best move we've seen here is that, well, it is a 25% move and has been somewhat stagnant. So for that, I think I am going to actually go back to AMD, because I do like the way the increasing up moves. Something we can also consider doing is looking at just the fundamentals, because so I am, like I told you guys before, I am on NMU. I got out some of the long positions in the morning yesterday because it was nearing all-time high ahead of earnings. And oftentimes when that happens, it pulls back because it's essentially, the way I see it, it's testing supply zones only to retrace them back ahead of earnings and possibly allow institutions or whoever to actually be able to get into the position. And so for that reason, sometimes when those things happen ahead of earnings or a decent announcement, I do, if it is an all-time high and those moving factors are there, I will consider unloading the position to get back in it in the next 24 hours or intraday. And so with that, let's go ahead now and look at AMD, and with a potential break-even price at around 75, and look at potential structural situations that may depict that. And so, like I said, I'm going to go no less than 3 months, especially with something that is very active like an AMD. And so at that point, if I go 3 or 4 months or a little bit below 3 months, which I don't tend to do, at that point I do go by open interest just to see where kind of people's minds are at and what does have the most activity, generally speaking, which can also help you look at where potential events that are coming up around that time may be. On a side note, something that I did say earlier is that you can consider looking into fundamentals in terms of market cap. So AMD, MU, and Nvidia. So if one has a market cap, like Nvidia is probably the leader of the three that has a much better market cap. So let me go ahead and look at the Nvidia market cap really quickly. So Nvidia market cap. So here we can see that the market cap is 331 billion, and then we can look at AMD. And then here it's 111. So we can see that AMD is 1/3 the market cap of Nvidia. And so at that point, we can look deeper into fundamentals, but then MU is the lower of the three, which is why I got into this position with a market cap of only 86. And so with that and earnings and all of that, that's why I chose to get into that one. And so we're going to now look at a lot of open interest here at around, let's look at 75, which is where we decided to control it. And we can see very little open interest there. So we can see here at the price of 80, which is roughly this base right here, be significantly more open interest. And you can always cross back and forth the two. And so in that, we can look at 80, and we can see that here, the break-even price, if you're going to buy a call for that, it would be roughly the price. It would be above the current price right now, right? Which is why I often tell you guys I don't really get into too much of these kind of positions in the money calls, because especially if it has a retracement, you end up losing that much more than just buying the stock outright, and intrinsic and extrinsic value, as well as, if you have a 4-to-1 or 2-to-1 leverage, it may not even be that beneficial to begin with to even just buy it in the money call. And that's why I tend not to go for those. And so here, the break-even price for an 80 call, if you want it to be long, would be above current price with the break-even at $95, $80 plus 1480 to get into a position is quite high. And so that's not going to work. Can we consider doing a vertical put? So 85, let's say, the risk reward here is really, really bad. You have a $5 risk with only a 100 upside between the two. At which point, then it might just make more sense to do the 80, which is the less probable one, with uh, a cap at 75, which is where you want to control it anyway. Again, I don't like this. I don't trade vertical puts in this manner. And I think you guys know that. So now, having had already looked at the potential up move for 3 months here with AMD, and let's just confirm it at 34% up move. So 34 over $9 is roughly 27. So let's look at a supply or at calls that are within $27 of current price and see what the risk reward for that would be. So if we add 27 to current price, it would be roughly $120. And so the 120 is 119. I don't love it. The one that 110 is $2. And if it were to go to 120, that $2.27 or $227 would essentially end up being, if it goes all the way to target, it would end up being roughly a $700. Well, if you exclude the price, if it hits 120, the value of this would be 1,000, right? And you're only risking 224-ish or so. So this could be potentially a 4-to-1 with the expected up move based on historically what AMD has done. And it could also be argued that a 27 or a 34% up move could be somewhat conservative, because we can see here between 7 and 9, it did 54%, right? So I would possibly consider getting into a 110 call here, all things considered. And I just noticed that the 110 does have a pretty good amount of open interest. And now my eye immediately goes to the open interest here for 100. So at 100, your reward would be 2,000. Because it would be a 20-point move, and that would also be a 4-to-1. Now this 4-to-1 is a little bit more expensive at 450. You're essentially buying a $450 worth of a call with a break even at 104. And your target range would be it would be the same 4-to-1, just around as doing the one we're just looking at 110. The best one here in this range could be the 105, because 320 to a potential target of 120 would be risking $320 for a gain of 1,800. That might be the best risk reward. And so that out of these three, all things considered, I would consider here the 100, because my account permits for that. I like exponential risk reward, so I don't like spending hundreds of dollars on a single call. But I would consider this one, or I would consider gambling it all the way at 110, buying two of these, right? So if we were to spend the same $450, we could do two of these, spending $500 for a gain of potentially 1,500. Here, spending $1,000 for a gain of potentially 4,000, right? So no, because we would only buy one, right? So the gain would be 1,500. So I hear that what I like the most is probably the 105. I like 105 a lot. So if I was looking to be long in the microchip, MU, Nvidia's, or AMD, I would look at AMD 105 strike, because right now buying an in the money call is just simply too inflated versus buying it outright. And if you cannot leverage options, in my opinion, then what's the point of trading them, right? And so this is what I like the most. Now, going back to MU, obviously they're about to report earnings. In the similar sector, it is the smaller one. Here, I am obviously very bullish MU because of the market cap, because they are in the US, and there's other contributing factors, fundamentally speaking, along with supply and demand and exponential up moves, as to why I chose MU out of the three. But I constantly consider getting into Nvidia. So actually, without making any buy, sell, or hold recommendations, I will go ahead and buy the AMD call. And of course, guys, I am not suggesting that you do this. You can lose all or more of your capital when you're trading in the financial markets. This is simply for entertainment purposes only. And so we were looking at March, right? 105. No, we must have been looking. Oh, this is another thing, right? So if I was looking at February, which I shouldn't have, I should have probably been looking at March. But if I was looking at February, and February is 330 for the 105, and then double. So the way I look at this is like, am I almost doubling the days without doubling the price by just adding $100 by just going off of this? Um, yeah, I like it. I do. I can see here why there's more open interest on the 100 because the break even price is $100, which is only $8 beneath current price. And in addition to that, it's only it's a benefit of $500. Meanwhile, you're only paying about $140 for that. So I could see here why there is more interest in the um in the $100 strike. Let me just check really quick if there's any questions on the YouTube live. Nope, no questions on here. Perfect. And so with that said, I will pull the trigger. Let's see, April. Well, for 101 days, which is 25% more days than the March one, it is 765. The March is 6. I mean, I don't want to spend $700 on this. I will say that even if I can afford it, I don't feel like it. And then there's two ways I calculate risk. Sometimes I'll do it by a risk per day, and sometimes I'll do it by meaning that if this is a 73 day, then I'll divide that, presuming it's one of a few trades that I'll take. And I usually only take a handful of trades a quarter and just manage those actively, like MU, for example, yesterday and what have you. And so in this, I will oftentimes, so I'm spending $700 for a expiration in April. Well, that's 101 days, 700. That's about $7 a day. I don't love it. So with that, I will probably end up just going with the AMD. At I am going with the AMD at 105. For March. Yep, I think that's what I like the most in the correlated sector. 110, the reason I'm going with the 105 is because it's only, this is a $90 difference for a $500 reward, right? This is a $5 gap between 105 strike and 110. So a $5 gain upside. And we're only spending, $100 more. So it is essentially, I look at it as a 5-to-1. So I'm going to go ahead and go with this one. I'm going to go ahead and buy it. Again, not a buy, sell, or hold recommendation. You can lose all or more of your capital. I will always bid for the lowest bid, and then I can manually adjust that later. And I will go ahead and submit the order. Again, do so at your own risk. You can lose all or more of your capital in the financial markets if you don't know what you're doing. So with that, that is what I am going with. And then what I mean by adjusting it later, I can go ahead and just say, I want to go $5 more short. And then I just go ahead and transmit modifications and kind of take it from there. I went over why I don't love Nvidia right now, because the benefit of the tech sector is, exponential up moves. And right now it could be said to be consolidating, but nonetheless, it's done very little since 11/11 until now, which is the demand that we saw on the QQQ, which is obviously the parent of the sector. So with that said, if you guys have any questions, feel free to ask me, because I'm pretty much going to close out the session if nobody has any questions. And I am looking at, you can speak them through on Zoom. Just know that if you do, you will be live streamed as well. And if no one has questions or anything else you guys want me to see your overview, you can ask now, or I will close down the session. But all in all, with this week, I presume will be very, very tumultuous. I could see if something were to happen in the election that is not mainstream media accepted, I could see a market pullback only for an immediate bounce back, kind of retesting what we saw on the Trump victory in 2016, where we saw the overnight futures market tank, what was it, like 400-600 points, only to catapult up from there. So I could presume something similar happening, because a lot of times supply and demand also tends to correlate with events of similar nature and retest the same or inversely from those same events. And so I could see that happening. I think we're going to have a rocky road between now and inauguration. Upon inauguration, there would be a significant implication with the Biden victory, I believe, in the tech sector, with the NEOs and the Teslas, as we've seen catapults, and I've said in the last few videos, 1776. And and implications with Chinese stocks too. They could rip, catapult the neos and what have you. A Trump reversal or contested or something along that nature, which I could see happening, would probably impact the. In addition to, you have to think with the Biden victory, where I think the general feeling is that we might see more lockdowns again, and so that would significantly boost, I believe, the tech sector once more. With the Trump victory, I would once again consider to look at stocks that would benefit from a sector quote unquote rotation, although I wouldn't quite call it that, into the Dave and Buster's, like we saw. What was that play, right? We saw that. And oftentimes when we see these exuberant moves, I do believe them to be retests for something a lot more realistic, right? We saw this up move, here 40% with the irrational exuberance of an early opening. I could see something similar retest with like a Trump victory, right? Because it's kind of testing the waters of the supply orders or what have you from a very fundamental and perspective, and uh, from deductive reasoning perspective and first principles thinking. So I could see that play out in that same way. So with that said, it doesn't seem too many people have a lot of questions. So I think I will leave it at that, guys. Thank you so much for watching. Like I said, you can always participate. Thank you, Erica. I do see you here on the YouTube stream. And then, of course, a lot of it is on the Capital Endeavor portal for the group students only, to make it a more seamless and easier to use platform that is immersive to Discord, to our group on WhatsApp, and our general broader curriculum at large. So with that, is this being streamed? Anyway, yeah, it is. Yeah, it is. Sorry, guys. So with that said, guys, thank you so much for being here. Again, feel free to ask questions in the chat or anywhere related here, and I will see you guys next time. Bye.